Democratic lawmakers in Washington are working to pass President Biden's social spending plan. Now they are seriously considering a new income tax on billionaires to help pay for the bill. The proposal would apply to roughly 700 of the wealthiest Americans, those worth $1 billion or more, or those who had an income of $100 million for at least 3 years straight. But the idea is already facing opposition from Republicans as well as some tax experts. For more on this, I want to bring in CBS News reporter Sarah Ewall-Wice. She covers economic policy. Sarah, great to see you. Thank you for joining us. Break down this billionaires tax for us. How would it work for these relatively few individuals?
Yes, Tanya, as you said, it would apply to about 700 people in the United States. This really has two components. The first component is a tax on tradable assets. These are things like stocks and bonds, and those would be marked to value year to year. So as they increase in value, they'd be taxed annually. The other aspect of this is non-tradable assets. These are things like real estate. And so when you have that, it actually wouldn't be taxed year to year the same way as tradable assets. But when they're sold, they would be taxed for the value increase in those assets, as well as a deferred interest, which is currently something we are not seeing the wealthiest Americans pay at this point in time. So that is the two major components of this. Right. There are a few additional provisions. When billionaires first come into this, they have the first-time payment. That payment can actually be paid out over a course of 5 years. Right now, we don't have the actual estimate, official estimate on how much this provision would rake in, but estimates have put it between $250 billion to $500 billion as Democrats look for ways to pay for their social spending plan.
So, Sarah, this is so much money. We're talking about so much money that these individuals have. So a lot of Americans simply don't understand why billionaires get away with paying so little in taxes, or in some instances, nothing at all. So before we get into sort of the reasons that people may be opposed to this billionaires tax, can you explain why that is that billionaires pay so little tax?
Well, billionaires are not being taxed the same way you and I are, because billionaires are not being paid the same way you and I are. The average American making about $60,000 a year, those taxes are withheld from their wages. Those are paid on an annual basis. But these wealthiest Americans, they're getting an income perhaps, but they're also building their wealth in terms of stocks and other assets that increase in value over time. And so they're not paying those the taxes on those increases annually. But at the same time, they can go to a bank, they can go elsewhere, and they can borrow against those assets that they have for this lavish lifestyle. So this would basically force them into paying taxes annually as their wealth continues to increase. You mentioned, though, that this is something that is unclear if it'll make it into the final provision of the reconciliation package. We do know folks like Senator Joe Manchin have said they would like Americans to pay their fair share. They like that idea, but he also said he does not like the connotation of Americans being taxed differently. So that could be a challenge for this being included in the final provision. Others have questioned whether this is constitutional. So this could face legal challenges. Republicans have raised that, but so have some Democrats as well. So that could be a problem moving forward should this be included in the package, and then it makes its way into the court system and it holds up the entire agenda. Right.
I think it's a key piece, though, that you mentioned, that billionaires are able to fuel these lavish lifestyles by borrowing against assets that are not being taxed. So I guess that's where, you could make an argument about, should all Americans be taxed equally? Well, yes, they should, but not all Americans are getting their income in equal ways, right?
And they can go for so long without actually selling any of those assets. So it continues to build, but they're not paying out on it.
Exactly. So it's definitely something worth exploring. But of course, there are a lot of opinions about this, and this is a sort of a relatively new idea. Senate Democrats also released a corporate minimum tax proposal on Tuesday. Tell us about that and why it might be something Senators Manchin and Sinema could get behind.
Yeah, so this is very similar to a proposal that President Biden had also included when he proposed his legislation months back. And what it is a 15% corporate minimum tax. And that would be a tax on the profits of companies that report $1 billion or more to their shareholders. The thing is these companies are reporting to their shareholders these massive profits, but then they go and they report to the IRS, the tax man, different numbers, so they pay lower amounts in taxes, if any taxes at all, year to year in terms of their profits. So this would put this on the profits that they're reporting to their shareholders. The idea is that it would bring in about $300 to $400 billion. Those are not official estimates, but those are some of the estimates that are out there. And it would actually only apply to about 200 companies in the United States. So just like that billionaire tax, this would still apply to just a small segment while bringing in a lot of money. The thing about this is that when we spoke to senators last night that had proposed this, they said that they already had the buy-in from the White House and Treasury Department, but they also had signal support from senators like Kyrsten Sinema and Joe Manchin, who have had issues with other tax provisions in the reconciliation package. So this is something that we know that is supported across the board and much more likely to make it into any final bill that may be introduced.
All right, negotiations continue. Sarah Ewall-Wice, thank you so much for joining us.
Thank you.